national anthem, sorry, institute anthem.
Sir, okay. A very good hello. Yeah. A very good evening to one and all. Respected Central Council Member, CMA H. Padmanabhan, Chairman SIRC, CMA Shankar Panikar, CMA Pranav Jayan, Secretary, Trivandrum Chapter, CMA Pramod Chandran, Treasurer of Trivandrum Chapter, other Managing Committee members, the members of our institute, and my dear students. On behalf of the Managing Committee of Trivandrum Chapter, we are pleased to welcome you all for today's webinar on Insolvency and Bankruptcy Code Opportunities for CMA. We shall begin this session with our institute anthem. Now, I would like to invite CMA Pramod Chandran, Treasurer of Trivandrum Chapter, to render a welcome address. Over to you, sir.
Good evening to all the participants and the dignitaries. I am here to say the vote of welcome speech. Here we got with us our dearest CMA Padmanabhan sir, and I extend a warm welcome on behalf of Trivandrum Chapter and from my personal side to our dearest Central Council member Sri H. Padmanabhan sir. Now we got our today's speaker, CMA Sri Shankar P. Panikar. I extend a very warm welcome on behalf of Trivandrum Chapter to Sri CMA Shankar P. Panikar sir, who will be talking about Insolvency and Bankruptcy Code, in which he is a very expert, and we are very lucky to have him with us today. Now I extend a warm welcome to our dearest chairperson CMA Nisha Madam, and our dear secretary CMA Pranav Jayan, and all the members attending the meeting, and also the students who are attending the meeting. I hope that all the participants will be benefited by this informative speech by CMA Shankar P. Panikar sir. Thank you. Thank you. Thank you.
Thank you, Pramod sir. Now, I would like to welcome Central Council member and mentor of Trivandrum Chapter, CMA H. Padmanabhan, to address the members and inaugurate this webinar. Over to you, Papan sir.
Thank you so much, Nisha Abhi Madam, the first woman chairperson of Trivandrum Chapter of Cost Accountants of India. Our honorable chairman and my younger brother, CMA Shankar Panikar brother, chairman of SIRC, the right person from our side. In fact, the Trivandrum chapter has chosen the right person to deliver on this particular topic, Insolvency Bankruptcy Code Opportunities for CMA. Respected our Honorable Secretary Pranav Jain brother and Pramod Chandran sir, Treasurer, and other managing committee members, dear participants. On behalf of Trivandrum chapter, me belonging to that chapter, representing Trivandrum chapter, becoming the council member, it is a matter of pride, and on behalf of the entire team, wish you all a very happy, healthy, prosperous new year. And I am very thankful to Nisha Abhi madam and Pranav Jain bhai that of course definitely to Shankar Panikar sir. This particular program was to be conducted say 1 month back itself, but for taking into my personal this thing and inviting me for the program, they have postponed it by another month or so. I could not come live for some other reason, I mean video. But then why I told that Shankar Panikar sir is the best person to deal with it, because he was a person who was congratulating others when they were clearing this IPA examination, and I was watching in various groups, he was going on congratulating others. The first person to clear this examination was our own President, Honorable President of the Institute right now, CMA Vijayendra Sharma, with very high marks. Then I told Shankar Bhai that then he asked, why are you scolding me? I said, you cannot continue congratulating others. When are you going to write this examination? Then he said, how to proceed? I said, you talk to Vijayendra Bhai. Then he spoke to Vijayendra Bhai, took my words very seriously. Immediately he joined for this course and completed the course very successfully, and also got assignment and fulfilled to the, as a true professional, he meticulously completed the job, and he got lot and lot offers also. But then now he is deciding which to accept, which not to accept. That is the level he has come. And moreover, we are very happy that he is the chairman leading us. I being a member of the southern region, I am proud to have such a wonderful chairman with a high qualification, including IPA, including law, including CMA, starting his career as a banker, then shifting as a practicing member, and the right person to in fact help the seniors who have completed IPA later after he has completed or before him, including for the youngsters to have an ambition and a goal that let me also become a personality like Shankar sir. That is how he has come to that level. I am very happy. Let us all listen to our Shankar Panikar sir. And from the institute side, in fact, our IPA, that Section 8 company formed by our institute is doing very well. And I have been given once again a chance to be the board member. Last year also I was a member, this year also. And soon we will be having a new managing director for that IPA company. Other than that, any help, anything you want from the IPA, that particular Section 8 company, please feel free to write to us. Those of you from southern region, you can even route it through Shankar Panikar sir. He will reach it to us. We will try to resolve the issues. And more and more, we have to make this particular IPA professional, this thing, whatever it is, made known to others so that they can also join for this course. Only thing is they have to see their eligibility. Not that any professional or any passed out CMA can or CA or this thing can join this, but there are certain criteria. Once you fulfill that eligibility criteria, if you become a qualified IP professional, I think the days are not far that you will definitely cherish and try to get more and more, not only for your own pocket or kitty, but also you will be able to serve the needy persons with your qualification. So the opportunities and other things our Shankar Panikar sir will deal very nicely. So once again, thanking the Trivandrum chapter of Cost Accountants for taking the lead on such a unique topic, and that will be very helpful. And I also wish, under the leadership of Shankar Panikar sir, to coordinate with all the other managing committee members of Kerala, Tamil Nadu, Karnataka, Telangana, Andhra, Pondicherry, so that some unique seminar or workshop is being conducted in each state and union territory, so that not that every member can travel to Kerala or Kerala people can travel to Telangana like that. So it will be very good if it is distributed, say half-day workshop or one-day seminar or say some PD program. It will be very good. That is my suggestion to Shankar Panikar sir, not only on IPA, especially many youngsters nowadays are coming to the practicing arena. And as you know, day to day, they have to get updated in GST and so many other things other than cost audit, which is our main this thing I am telling. So it will be very helpful for the practicing members. Also for the members in industry who deal with these practicing members also will know what are all the things we have to do, how to maintain cost records, how to maintain this, that, and how to understand what is GST, what is IPA, what is RBO. Like that, so many things are there, so many avenues and opportunities are there. We have a dynamic chairperson, Nisha Abi madam. Similarly, we have luckily our own person as a Southern India Regional Council chairman, whom I see that the future of the profession is safe if such youngsters, if they show some willingness to come up in the ladder and continue to contest the election and win the election with everybody's support and serve our profession, it will be very good. And when the youngsters shine, I am not telling I am too old, but as elder, we will cherish when youngsters shine. Normally, it is a cherishable this thing for elders also. So that way, I think the profession is safe. Thank you, Nisha Abi madam, once again, Pranav Jain Bhai and Pramod Chandran sir, other managing committee members of Trivandrum chapter for giving me an opportunity to be part of you. Yes, since you told inauguration by me, the 2023 first program, I officially use that sentence to tell that let us all jointly inaugurate this PD program. Let it be a beginning and more such programs be organized. And I am very happy with Trivandrum chapter. One more thing, that you are keeping in the evening hours, not colliding with the SARC PD program, which meticulously Shankar sir is ensuring that each week a specific day, either Friday or Saturday PD program is there. So tomorrow also one PD program is organized by Shankar sir. He may tell during the course of his deliberation at the beginning or end about that also. My point is, members are getting opportunity in different ways. Why? Because the leadership want the members to benefit by organizing many professional development programs. So once again, I thank the Trivandrum chapter and the managing committee members and Shankar Bhai, and all the best to Nisha madam and Shankar Bhai for the forthcoming session. I will be definitely here trying to listen and learn what our honorable resource person, speaker of the day would like to. And for everybody's information, Institute is planning global summit in the month of March. Of course, Shankar Panikar sir also will disseminate those things. Later on, Nisha Abi madam will be disseminating to the Trivandrum chapter people, Shankar Panikar sir to the entire Southern people. Shankar Panikar sir will be having a role in that global summit also organized by the Institute. So please be part of any program of the Institute. When more and more number of people attend and benefit, there will be a message to the government that this particular organization, Institute, have a huge number of members who are committed in learning and disseminating the knowledge they have benefited by listening to serve the nation, to be partner of a nation building process with the government of India and the respective state government. Thank you, Nishabi madam. I have taken a little bit extra time. Over to you for welcoming our beloved chairman SARC plus resource person of the day. And let this not be the end, because he might not be able to cover so many things within the short time. More such a program with the quality speaker like Shankar Panikar sir should be organized in future also. You can encourage other chapters in Kerala also, madam, because nowadays you people have revived that Association of Kerala chapter of Cost Accountant. So kindly go ahead with the unity and togetherness. Over to you, Nisha madam. All the best. Thank you, Shankar sir, Ramachandran sir, and Pranav.
Thank you, Papan sir, for your words and your valuable time given to inaugurate this session. Now it's a time to listen to our speaker, who certainly doesn't need any introduction, but as a courtesy, since sir is a speaker, I'm just giving a brief introduction. Advocate CMA Shankar Panikar is a fellow member of our institute and is a graduate from School of Legal Studies, Cochin University of Science and Technology, Kalamassery, Kochi. He is a registered insolvency professional under the Insolvency and Bankruptcy Board of India. Being a practicing lawyer based at Kochi with core focus on insolvency, corporate law, and taxation laws, he is enriched with 20 years of experience in cost and management practice, banks, and also in manufacturing industries. He is currently heading the corporate insolvency and taxation law vertical of Panikar and Panikar Associates in Kochi, which is one of the oldest lawyer firms in Kerala with over 64 years of practice. He has held the position of chairman of Cochin chapter in 2010-11, and he has been elected to the regional council for the term 2015 to 19 and 2019 to 2023 consecutively. And as you all know, he is now occupying the position of chairman of as chairman of SIRC. So we are happy to have you here, sir. We are waiting to listen from you on this said topic. Over to you, sir.
Thank you so much, Chairperson of Trivandrum Chapter of Cost Accounting, my most respected Sri H. Padmanabhan. In fact, I will be failing in my duty if I don't thank him personally for motivating me. Otherwise, I would have been, just another person in this, profession. So I will always remember you in my life because you only pushed me to, to this insolvency practice, and God was always kind to me and could qualify that. Madam Nisha, I'm so proud of you. You are making a lot of impact. It's such a lovely feeling to see a lady from our own state taking lead, ably supported by my dear friend Pranav, energetic guy. I'm seriously, I'm telling you, I'm jealous of you, Pranav. You have put down, you've reduced your weight, and I'm so proud of you. How your attitude to, how you look at it. I'm sure that you would have lost at least 10 to 15 kilos. And I'm so jealous of you. In spite of all my efforts, I'm not able to reduce it. I reduced about 5. Again, it went up. So I'm back to square one. And Pramod Chandan sir, thank you so much. You are a lot of things I get inspired. You are a very cool, calm person. Maybe yoga is helping you. Thank you so much for all of us for inspiring us. With permission of Padmanabhan sir, I'm just starting my presentation so that let us. Thank you. You take care, and I'll call you later on. Thank you so much.
All the best. All the best.
Thank you, friends. This is a very, very excellent initiative, according to me. Not just because you've been so gracious to invite me, but the fact is, Insolvency and Bankruptcy Code is making a lot of changes in the economy of India. And if you look at the financial numbers of banks like State Bank of India or any other nationalized banks, this is making a lot of impact. Moreover, there were some legendary issues with the recovery mechanism which was prevailing in India. For example, we had a lot of other earlier laws. We had SURFACE is still there. Then we had Sikh Industrial, Sikh Industries Company, SICCA. All those things did not yield sufficient results. So what was the main issue? The main issue is the investors don't have clarity as to what will happen if what is the carry for, what is the real mechanism of the investors getting back their money. especially lenders. All this went into a lot of legal tangles. So suddenly, the Banking Law Reforms Committee decided to go for this, and ever since this government, I'm talking about NDA government in 2014, took over the regime, they quickly passed this enactment in no time, back to back, very quickly, typical of them. But then it also comes with some sort of clarity, in the sense this law is evolving, friends. This law is evolving, and jurisprudence is evolving, and you never know what will happen. For example, every 4 months, every 6 months, we have amendment to this act and code and regulations. So therefore, it is extremely important that you stay updated. So I'll just start my presentation, and in between, after this, I will spend 5-10 minutes, if at all require a discussion, and we will try how we give some ideas of how to take up this as a career. I'm just sharing it.
1 second, hold on. I will make you and the presentation together.
Okay. Is my presentation, is my PPT, you can watch this, sir?
Visible, but you make that PPT portion more bigger.
Okay,
so
I'll do that.
That left side will not come.
Okay.
Your right side.
This is fine, no? Everyone can see this, I hope.
Yes.
All right, thank you. I'll just start. So, see, as Padmanabhan sir said, it's a very big enactment, very huge portions. But I intend to give you a brief overview. Then we will discuss as to what are the opportunities for a cost and management accountant. Before that, let me tell you, friends, I definitely have an edge when it comes to analyzing certain things in IBC, or when I make a submission before the adjudicating authority, just because I'm a cost accountant. Just because as a cost accountant, as a finance professional, we always have an eye for financial numbers, correlating, taxation, all those things, that law and finance go hand in hand. So therefore, cost accountants will have a always will have a big role to play. I'll tell you why. In all the cases of IBC, there is always a story why this company has been admitted to corporate insolvency resolution process, and because why this has happened, what is the history of this, why this was pushed to CIRP. We will every case comes with a small history. For example, it can be investing too much on fixed cost, or capacity not being utilization, thumb rule management, not objective. Most of the companies do not have cost management principles, or cost management, or a keen eye on costing, budgeting, all those things we see. So for me, it is a learning whenever I get to see a case being referred to as corporate insolvency resolution process. It is a painful thing, though, that employees will not have salary, lot of pressure, but then end of the day, it was a control of the debtors, now being changed from debtors control to the management by the creditors. That is the essence of IBC. So today I'll try to give you a brief idea of IBC. Then we will discuss as to what all areas where cost accountants can focus. And believe me, it is not a sort of motivation statement or something like that. I mean what I'm saying. Please let us just go through this presentation. Friends, this is the preamble of the Act. So I'll take some time for this, because this makes the difference. This is the real difference between a normal code or Act and IBC. So you'll be asking why this particular act is not called Act, Insolvency Bankruptcy Act instead of code. The answer is very simple, friends. Here in this IBC, Insolvency and Bankruptcy Code, lot of sections or provisions have been taken from lot of acts and codified. So therefore you can see this when you go through the act. You can see glimpses of Companies Act coming in, you can see SICA coming in, you can always see PF coming in, you can always understand, you can always see the income tax angle, GST angle, everything comes. Okay, central excise, GST, everything comes here. So therefore this is a unique code by itself. So you have rules, regulations, and everything. For example, when you go through the Insolvency Bankruptcy Code in the website of IBBI, www.ibbi.gov.in, that itself is very unique. You just have to go through the act, regulations, rules, notifications, and circulars. So that itself is comprehensive. So everything will lie within these things. So if you want to file an application, there is NCLT adjudication rules. If you want to know more about insolvency practice, there is IPA rules. So IPA regulations. So therefore, this itself is a comprehensive thing. I remember when I passed this particular thing in 2017, I was the earlier one of the first. I was the first person in Kerala, first person to have taken a case. It was so confusing, friends, and I used to attend seminars or sessions whenever I could, catch hold of. Most of the people get confused when you read this act. Even when I was preparing this examination, we had no other books. Now there are a lot of options. There are a lot of material. In fact, our institute has got Insolvency Professional Agency. We have got amazing materials in our websites. But those days we never had. So I had to take the longest route, which is buy a bare act and read, and they will test your memory. Now things have changed. You have got materials, but then examinations are tough. I'm not using the word that tough is impossible, because for a cost accountant, we are disciplined, we are regular, we are methodical. So therefore, if you put in a little bit more time, I'm sure all of us can pass. I'll touch upon that a little later, but then we'll understand the preamble, because this is extremely important, friends. Most of the people make mistakes by not reading the preamble, the object of a particular act. So this is the reason what is the reason for which IBC is enacted, and I'll try to attempt to explain the difference. So this is an act to consolidate and amend the laws relating to reorganization and insolvency resolution of corporate persons, partnership firms, and individuals. Let's take a small break here. So what is the purpose? Consolidate and amend. That means there were a lot of acts, there were a lot of confusions. So we were trying to consolidate and constantly amend. It's not that you consolidate and you say, bye-bye. No, it amends, because this is a very, very, very unique thing. Every day, something or other unique thing pops up. Even today, I had appeared before NCLT and we had a unique issue. So tribunal members also were confused, because they have never seen such an instance before. So it is like an amendment, a consolidation, and then amend the laws relating to what? Reorganization and insolvency resolutions. Friends, I repeat, reorganization and insolvency resolution. It is not mentioning about recovery. It is not mentioning about selling the assets. So essence of IBC is to reorganize and to resolve the insolvency. So reorganizing meaning you are giving, if at all a company is having an issue, insolvency issue, the state of not being able to pay debts, they will have to be reorganized. Somebody has to pump in money, somebody has to structure this, somebody has to give more loans, or somebody has to give more equity, somebody has to take a hit on the loans, receivables, all those things. And you can have another, line of business, use this assets for something else. So this is called reorganization and insolvency resolution. So here we are looking at whether something reorganization can result in resolving the insolvency. So not getting recovery. There are numerous judgments which says insolvency bankruptcy code is not meant for recovery. It is for insolvency resolution or resolution of insolvency. But then end of the day, let me tell you, friends, I'm being very honest here. Most of the banks take this action for recovering only. But then facts are fact. Let us accept, be it as it may. Let us proceed. Of whom? Insolvency resolution of whom? Three types of people: in corporate persons, partnership firms, individuals. So corporate persons meaning whom? Companies, LLPs. What is partnership firms? General firms. General firm. We know that the Partnership Act 1930s. And the individuals. So who all are left out here? According to me, trust, associations, societies, clubs. Now, there are a lot of trusts which are very, 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 huge. They have taken huge loans, but they are not coming under this purview of IBC. What is the reason? I don't know. But then corporate person, companies, LLPs, partnership firms, and individuals. Now, friends, just take a moment. Here, typical of our Indian economy, Indian law ministry, they don't notify all the sections at one stage. Even for that matter, Companies Act 2013, when it was enacted, all the sections were not notified on that day. On a part by part structured way, they have notified. Like that, IBC also have not notified all the sections. For example, in the case of partnership firms and individuals, the adjudicating authority is the debt recovery tribunal. At this point of time, it is not notified. So if there is an insolvency of partnership firm or individuals, it is not notified, therefore it is not applicable. However, if there is a personal guarantor for a corporate person, then that NCLT can hear the matter. Let me repeat. Corporate persons have been notified, but if there is, for example, I am the director of a company. I have given personal guarantee to a loan given by, say, State Bank of India. State Bank of India can take action against me being the personal guarantor. It is possible. But where do they go? Not to Debt Recovery Tribunal. It is National Company Law Tribunal. Therefore, at this point of time, insolvency resolution of corporate persons includes companies, both any type of companies, public company, private company, government company, anything, and LLPs, partnership firms, and individuals. But partnership firms and individuals are not notified at this point of time. Individuals, only the personal guarantors have been notified. And how do they do that? In a time-bound manner. Friends, this is the difference. Previously, there was nothing like time-bound. In IBC, you have been given certain times for each activity. Each activity, there are certain times given. Therefore, it has to be done on a time-bound manner. For what? If you don't do it in a time-bound manner, what will happen? Maximization of value of assets of such persons will never happen if it is not done on a time-bound manner. Therefore, IBC is structured in such a way that it is looking into the maximization of value of assets of such person. For what? To promote entrepreneurship. It's not that to close the business and go. To promote entrepreneurship. How? If at all you have made a default, somebody will come and take the company, and it will try for a going concern to ensure that the company is moved on as a going concern, give employment, pay taxes, take loan, repay loan, more business, income, GST, all those things. So that is the outlook for this particular thing. Availability of credit. See, there's a director of a company. I defaulted. Somebody comes who has got a better, better company, big company, credit standing. He can take over me and they can run the show. So availability of credit will be there. For the company also gets when it is managed by a proper good person. And balance the interest of all stakeholders. How beautifully they have written. Balance the interest of all stakeholders. Doesn't mean that you give certain somebody's taking decision, so let him get more benefit. Somebody's just a spectator, let us ignore them. No. In the IBC, when a resolution plan is passed, it is a compulsory section that the plan has to balance the interest of all the stakeholders, and it has to be a declaration given. So it's so important, because friends, this is that is why it survived the test of constitutionality in Swiss ribbon case. Justice Nariman said this code is fully compliant. There are small things, but there is a intellectual differentia. So therefore, this has survived the test of constitutionality, and I'll explain to you a little later why I'm using this word. Look at this. Last three is just like Surya Kumar Yadav, 360-degree. This is one of the beauty of this IBC. What is that? It says, including alteration in the order of priority of government dues. What was the earlier position? You default or I default, I'm least bothered. Government dues, number one. First pay to the government, then you do whatever. Now things have changed. It says, government says, let the company run. Get up and run. Dues can be paid later. I will be in the fourth position. First is secured, then unsecured. Employees, then I will come. That is what government says. Beauty, no? Surya Kumar Yadav, 360-degree. It was totally different from earlier position. And what? And to establish an insolvency bankruptcy board of India. Never in the history, other than our SEBI, where a board has been constituted. Likewise here, a board has been constituted, Insolvency Bankruptcy Board of India. Why? Because this was felt that across the globe, this insolvency law always have to be amended, regulated, updated, technology driven. Therefore, there should be somebody who is who should run the show. It's not like Ministry of Law or Ministry of Corporate Affairs or Ministry of Finance should run this. Had it been like that, it would have been a disaster at this point. But here IBB is doing an amazing job. Therefore, in the preamble itself, they are saying IBBI, establish an insolvency bankruptcy board of India, and to matters connected therewith and incidental thereto. Normally, we just read preamble and skip. But friends, this preamble makes the difference of IBC. So what is this? So basically, it will consolidate the law, organization for the insolvency resolution on a time-bound manner, so that the maximization of value happens, to promote entrepreneurship, availability of credit, and balance of interest of all stakeholders. And government says priority can be reduced for us, and of course to constitute a board. Each of these will have a bearing on the sections which we are going to discuss. Whenever you have a doubt, go to the preamble, you will have an answer for this. For example, on a time-bound manner, in the preamble it is said time-bound manner. What are the ramifications? Friends, when an application is filed by a bank for a corporate insolvency resolution process, what was the earlier regime? Resurfacy or Recovery of Debts Due and Bankruptcy Act. Banks will take umpteen number of years to give the information. For example, getting documents. Now it's not like this. There is a company called Information Utility, National NESL. Those people will say, look, there is a default of this much money by this borrower. How do they get the information? Banks share. Once they get the information, this information utility, that company, don't get carried away by the name Information Utility. It's just a company. It is just a warehouse of the electronic data. That company will first ask the borrower, look, I've got a letter from State Bank of India. You have taken loan. There is a due. They will send the message. The borrower can either accept or deny or abstain. Second letter will go. Accept, reject, or abstain. And if it is not done like that, third time it will be condemned at acceptance. Assuming he has got a difference or dispute, that can be taken up and it will be taken back to the lender. So therefore, when an application is filed, an information utility certificate is enough that to confirm a debt. Therefore, look at the usage of technology, digitalization. So this is the beauty of this code. I'll just quickly move to the next section. So friends, as I told you, this is a single insolvency and bankruptcy law. It was earlier, 1956 Act, 2013 Act, SICA, provincial insolvency, presidential insolvency. All of us knew in 1956 Act, there was talking about, creditors winding up, voluntary winding up, all those things. Now it is not there. In 2013, beauty of 2013 Companies Act is you cannot have a creditors winding up. It has to be routed through IBC. You cannot have a members winding up. It should be routed through voluntary winding up under section 59 of IBC. If there is a deadlock between the management, there is section 275 where the tribunal can wind up the company. So how beautifully they have structured. And SICA was an old lame duck. I don't think any company has benefited out of SICA. An operational agency will come, give a plan, it will never work. The value of stakeholders will diminish day by day. I still know a case where KFC, I'm not naming the borrower here, KFC approached us and KFC said, sir, it is not closed. We have got this in 1983. The company said, okay, we will settle. Never did. After 10 years, they sold for less than 20% of the value. Thereafter, directors, all the directors other than one director has passed away. The left out director is not elderly, very elderly person. He cannot write or read or anything. He cannot remember. His memory is lost. Very elderly person, plus 95. So therefore, all these things have reduced the value. Now KFC says, sir, please recommend to the client, please give 5 lakhs rupees. We will once. I said, how can I ask a borrower to again give you, because you have given a no objection certificate, you have given a clean sheet to this person. So all those things, legendary issues were there, and we have survived. So single law. That is why I said, is a code by itself. Friends, if you look at this, if you look at the rules of IBC, the process is very simple. There are forms for everything. You need not become a Shakespearean. You need not apply a Shakespearean English or a wonderful, nothing. There is a form, you just fill in up. There are columns where you have to write then figures, and there can be a little bit of description of the loan, and absolutely that is fine. So that is because the intent is time-bound manner. Okay, that is the logic of this. So how this particular thing is structured, friends, this is a preliminary thing, then part 2, part 3, part 4, and part 5. Part 2 talks about corporate insolvency resolution, liquidation, pre-package, fast track, voluntary liquidation, adjudicating authority, and offense and penalty. And the other one, see, I'll quickly go through this because of the time of this thing, and our focus is on how it's going to be an opportunity for cost accountants. Look, in the part 2, please remember these things. There are 5 parts. In the part 2, we are talking about insolvency resolution of corporate persons. And if there is no resolution of corporate persons, the code says liquidate the company, pay off. And the other one is liquidation process. So the liquidation process, there are 2 types: voluntary liquidation and the normal liquidation, which will happen after a corporate insolvency resolution fails or do not have a resolution plan coming in. So it goes to the liquidation. So suppose there is a default, company will be put to corporate insolvency resolution process. May I call it as CIRP? Once CIRP is triggered, there is a lot of processes. If that process, during that process or during the course of that process, if a resolution comes, that will be the leading light of that organization. That plan will lead the company to the future. And assuming there is no resolution coming in, then immediately liquidation. Why, sir? It's liquidation. It's very, friends, that is the reason why. Go to the preamble. Maximizing the value. If there is no resolution happening, quickly sell the company and give it to the creditors, because at least they have got some money at this point of time. If you're giving it after 20 years, where is the value? Where is the value? That is the logic. Then there is pre-packaged insolvency resolution, fast track insolvency resolution. Friends, let me be brutally honest here. initially, even now also, CIRP could not actually yield result as what was thought of. Everything was moving to the liquidation. COVID came. All those things were, catapult or cumulative effect. Therefore, government thought we should have some sort of different ways of resolution process. So something new came, which is called prepackaged, not prepackages, prepackaged insolvency resolution process. Friends, it is something like this. We know about one-time settlement. This is like one-time settlement. This is, according to me, a one-time settlement giving an insulation, legal insulation, meaning one-time settlement in the between the bank and a borrower, or a lender and a borrower. There is no legality. You sign on a document, and most of the time, if it fails, gone. Now, in this case of a pre-package, pre-pack, meaning the debtor will go and ask the creditor, look, sir, the banker, sir, this is a plan which I have. Please accept it. I will go to the NCLT and get a legal sanction for it. There can be yes or no. If it is yes, yes, it can go. If it is no, lender will say, look, we are okay with that, but you please follow this process. Then there will be like auctioning for a better price or something like that. For a better price, if the lender is going to be offered by another person, there is something called open bidding and other things. I'm not going into detail because it is just going to confuse you because our presentations will have very, very few, limited time. So I don't want to confuse you. End of the day, my wish is to all of you should leave this today's seminar with at least 4 or 5 takeaways. So there are processes like CIRP, corporate insolvency resolution process, liquidation process, pre-packaged insolvency process, fast track. Fast track is just crushing, meaning if CIRP takes 180 days plus 90 days, fast track takes only half of it. But then normally what happens is the volume is less. But I have not seen much case of fast track happening in India. Pre-package also very, very few. CIRP in galore about 4,000 cases. Then voluntary liquidation of a company. If the director board calls up and decides that let the company be voluntarily wound up, there is a process. Do it as soon as possible. Quickly you do and come out of it. So again, there is a law. And of course, adjudicating authority for corporate persons. Friends, what happens is the adjudicating authority for a corporate persons, please hear me carefully. It is National Company Law Tribunal. And if anybody is aggrieved, they can approach to the appellate tribunal, which is called National Company Law Appellate Tribunal. National Company, NCLT, National Company Law Appellate Tribunal, which is in Chennai. Ours is in Kerala, ours is in Ernakulam, Kakanad, but now we are having online sessions. So NCLT and NCLAT, and beyond that, if somebody is aggrieved, you have to go to the Honorable Supreme Court of India. Therefore, there is no role for High Court. You have to necessarily route it through NCLT, NCLAT, and High Court. Now, what is the beauty of NCLT? NCLT, hear me carefully, sir, friends. NCLT is a tribunal constituted under the Companies Act 2013. Therefore, it is not a constitutional. They don't have the constitutional powers like looking into the equity concepts or constitutional. No. They will look like with a blinder. They will look whether the process or the provisions of the code has been met or the companies have been met, or else they will not. They are not going to check whether the equity, all those things. Let me tell you, when this code was, started, there were 15 of, NCLTs, left, right, center. Every tribunal were giving their own, interpretation of IBC and giving a lot of judgments. Then Justice Rohinton Nariman just pulled up all those things, said, you are not supposed to interfere this. Please bring it to the Supreme Court. And he has made a lot of art, but not have, if not Justice Nariman was not there. But for Justice Nariman, IBC would not have evolved in the way it is now, at least this stage. So NCLT, NCLAT, and Supreme Court. So that is a part 2. Now, part 3, an offense and penalties, friends. It's very, very huge penalties. If at all you are trying to do with a malafide intention, you can end up paying in a fine not less than 1 lakh, but not more than 1 crore. And if you're extremely lucky, you can be behind bars also. Therefore, very careful. So that part 3 talks about insolvency resolution of individuals and partnership firms. As I told you before, it is not notified. But then all those personal guarantors of a corporate debtor will fall under the part 2 in as so far as the adjudicating authority is concerned. But then the process, they have to follow part 3, meaning if a personal guarantor, if a company did not pay, personal guarantor can be held responsible by the creditor. They can follow section 95. Forget about the numbers. It just came like that. It is 95. I don't want you to remember all those things. Understand that in part 3, there are certain specific sections. The guarantors, any action against the guarantors should go through that. Therefore, only thing is the adjudicating authority for personal guarantors would be the same NCLT who would have otherwise decided the case of company law. For example, a company registered in Kerala, assuming he has defaulted, the promoters of the company, if they have given personal guarantee to the lenders, the guarantors can be booked and NCLT will hear the matter. Friends, there are a lot of case laws. Lalit Kumar Jain essentially says the contract of guarantee is a coextensive with the main debt. Therefore, even if there is no action, even if there is no corporate insolvency resolution process, you can even take up the personal guarantors under section 95(1). Therefore, it is a very, very, very critical thing. And regulation part 4 talks about how the insolvency professionals are being regulated. What are the agencies? Quickly, I'll tell you, friends. As Padmanabhan sir said, you have to pass an examination. What are the minimum criteria for becoming an insolvency professional? Please hear me carefully, friends. This is something important or something very helpful to all of us. A chartered accountant, cost accountant, company secretary, or a lawyer. Chartered accountant, CA, CMA, CS, a lawyer with 10 years of experience, or a person with 15 years of management experience have to write up examination. Limited Insolvency Examination, LIE. It is, you can go through the website, click examination, click it and go to the LIE. You have to pass that. Once you pass that, you will not be eligible to become an insolvency professional. After passing that examination, you have to undergo a 50 hours of training. Once you pass this 50, nowadays it is happening in online mode also. Friends, it is actually very good. In fact, when I started off, there were certain, to be very honest, I'm not being humble here. I was so petrified to take any actions. But then, certain RP, certain insolvency professional, their acts actually gave me I was just shocked. How can a professional, finance professional like this take an action without applying their mind? So the reason they have found out, because either by hook or by crook or by fluke, he qualified the examination, but then he never had that, rational thinking or a commonsensical thinking not to have done all those things. And IBBA did not penalize him in one of the cases. Just, okay, you be with a senior person for 6 months and don't take up fresh assignments. So IBBA thought that no, you need to have a formal training given to all these people before taking up before taking up before him taking up their assignments. So therefore, the view is you have to be a chartered cost company secretary lawyer with 10 years experience, plus examination pass, plus 50 hours of training. Yes, of course, you have to pay some 15,000, 10,000 or something like that. Yes, initially, and within 5 years you have to make. And friends, a lot of other things are also happening. Assuming you have been engaged, you have been appointed as a resolution professional, whatever fees you have got from this assignment, 0.1% has to be given to the IBBA as a professional fee. So all those complications don't get carried away. The fact of the matter is, if you're getting any income from through this resolution, I mean insolvency practice, you have to pay a share, 1% to the Insolvency Bankruptcy Board of India. And yes, huge money, but then it comes with a cost. So insolvency professionals are one of the pillars. They do the management of the company which is under CIRP or liquidation. The other one is IPA, Insolvency Professional Agency. Who are they? As Padmanabhan sir said, it is a Section 8 company where they are, according to me, they are between IBBA and insolvency professionals. They are in between. So I am registered with Insolvency Professional Agency of our institute, and in registered with IBBA. So I am as an insolvency professional. All of us are regulated by two people. One is IBBA, one is IPA. IPA is very clear: train, regulate, register, and other things. IBBA is very clear. They will come up with new laws, new things, new amendments, and all those things. Reporting itself is a big challenge. Friends, there are a lot of forms: CIRP 1, 2, 3, 4, 5, 6, 7, 8, plus monthly reporting. It will take away your peace of mind. I'm telling you, bigger the work, bigger the confusions. Every day it is changing. But I'm telling you, this is a profession which you can expect a lot of, respect in the society. I'll explain to you later. So regulation of insolvency professionals, agencies, IPAs, and utilities, information utility. I just told you, this is a company, again Section 8 company, where there will be a reservoir of information in digital form. They will pass on the information. They will store the data. They will help you in, storing, reporting, and all those things. So it is a lovely organization. NESL is the only company which is functioning as an insolvency professional unit. Then there is something called IPE. Please hear me carefully. IPE, not IPA. IPA I explained to you. IPE is insolvency professional entity. What is that? Insolvency is a company with minimum 1 crore paid up capital. Group of insolvency professionals. They can form entity. Nowadays, the latest amendment says insolvency professional entity can become a resolution professional. Yes, there are specific laws, because it was found that an individual cannot do this perfectly. There should be a collated effort. Professionalism, the infrastructure, all those things is needed for insolvency profession. Therefore, a small one-man army will be very difficult for a small one-man army to manage a big corporate. Believe me, it is very difficult. If at all I am saying it's very difficult, consider it is not less, it is just 10% of the gravity I'm saying. It is extremely difficult, friends, because every case is different. But then don't think that it is impossible. It is not impossible. It is definitely possible, but you should have the right person at the right, place during this CIR. So I'll just quickly move to the next slide so that we don't miss out the things. So different ways, corporate insolvency, pre-package, I've explained to you, individuals and partnerships. And friends, what happens is, if there is a default of 1 crore, company can either be and if there is a default proven, it will be either, it will be, admitted for corporate insolvency resolution process. A lot of processes are there, and if a resolution plan comes, it will be passed. It has to be passed with 66% of voting share of whom? Committee of creditors. Earlier there was managing director, board of directors. Now once a CIRP is admitted, the IRP, the interim resolution professional, who will be there for 30 days, he will call up claims. Please come and he'll go to the public announcement. He'll ask the creditors to claim. With the claim, with the claims, he will form a committee of creditors. Who all are the members of committee of creditors? Only financial creditors. Who are financial creditors? Friends, be very clear. I'm not talking about secure creditor or unsecured. I'm talking about financial creditor. Who is a financial creditor? Financial creditor in the most simplest language is a person who has given you money. So money has to be given. And in return, he is getting interest for the time value of money. Therefore, there has to be a financial debt for which there should be a repayment for interest. All right. So therefore, that is financial creditor. For those people who have rendered goods, rendered service or given goods for which money has not been received back, they are called operational creditors. So according to the definition, operational credit, government is an operational creditor. Taxation, tax department is an operational creditors. They say that government is rendering service to you. You may have difference of opinion. I may have difference of opinion, but government is rendering service. That's the definition. Therefore, financial creditor who has given money, financial debt, in return they're getting interest. Operational creditor, he's a person who has given goods or rendered service but not got back the money. So these people will claim, lodge their claim. There are specific forms, form B, C, D, E, very simple. Okay, but IRP will get the forms. Please hear me carefully. He will verify and collate. He is not supposed to be an adjudicating officer. He will verify and collate, and we'll say that, okay, your claim is accepted. Assuming that claim is having some issues, maybe limitation, old claim, or arithmetical accuracy, something like that, then he will reject it. And with that, he will form a committee of creditors. Committee of creditors will decide the future of the company. And that person, after 1 month, that is IRP, interim resolution professional. Don't get carried away. People tend to get confused when I use the word IRP, IP, and all those things. Basically, it is insolvency professional. When he starts this insolvency proceedings, for the first 30 days, he will be known as interim resolution professional. That I stands for interim. After the first committee of creditors meeting, either he can be retained as a resolution professional, interim will move off, or another person can be appointed as a resolution professional. This resolution professional will take over and do some certain activities, and he will seek what are the activities. Basically, he'll collate, he will go for issuing expression of interest for somebody inviting the resolution plan. He'll prepare a document called information memorandum. It is a Bible. It is like Bhagavad Gita. Everything about the company in that document. It is a dynamic document. It changes every time when the RP gets information. That is to be given to a prospective resolution applicant to give resolution plan. And in the event that resolution plan, somebody is interested and gives to the committee of RP for discussing in committee of creditors. And if it is passed with 66%, that resolution will be taken to the adjudicating authority, which is National Company Law Tribunal. Once they approve, that will be final. According to the Ghanshyam Mishra case, if a resolution plan is passed, then nobody can change it. A big Singapore case, nobody can. And it will be sacrosanct. You cannot change it. So it was very easy for me to explain the process in the last 2 minutes, saying that RP, collate claims, call up information memorandum, expression of interest, call up collate the information, make an it is simple to say, but friends, it is too much of difficulty. Every other day some litigation will be there. Okay, assuming in spite of all these things. So what happens, the time frame is very clear, friends. 180 days. 180 days, they have given a window. If it is not possible, you can extend another 90 days, one time maximum of 90, and beyond 270, if at all there is any delay in legal process, up to 330. There are several judgments which says even though 330, that is, Committee of Creditors of SR Steel versus Satish Kumar Gupta. It says even though 330 is given, it is not mandatory. But NCLT and NCLAT can apply the thought, and in exceptional cases, they can extend more than 330. So you have to see that whether there is an exceptional event has happened so that this can be extended. Friends, these are all areas where you need to put in your mind, apply your mind, keen focus, otherwise it will not happen. So therefore 180 plus 90 up to maximum 330, this CIRP will happen. If it is not getting a resolution plan, it will go to liquidation. Liquidation under section 30 subsection 33(1). What will happen? According to the code, it says when a company is put into liquidation, the same RP has to become the liquidator. If he's not interested, he need not give a consent. There is a consent form. If he's not giving his consent, some other person will be the liquidator. Liquidator within the first 90 days have to ensure that the company should be liquidated as a going concern. Look at the way it is read. It is not to sell the company in the first day. Let somebody come. The only thing is difference between CIRP and liquidation is in the CIRP, the resolution plan can say that, okay, I will instead of 100 rupees, I will give him only 80. For the operational creditors, instead of 100 rupees, I'll give him only 20. So all those things are haircuts. But in liquidation, no haircuts is possible. The liabilities will come back. One important thing I forgot is when a CIRP is initiated, section 14 comes into force. What is section 14? Section 14 talks about moratorium. No legal proceedings, suit, arbitration will lie. The intention is when a CIRP is admitted, you have to allow the company to undergo the process of CIRP with peace of mind, not to fall into litigation space. Actually, it is not going to happen, but then, so everything, no case will lie. So this RP can continue this. Once it is over, all this, if at all liquidation is ordered, every cases will come back. So 90 days, they will look whether the company can be sold as a going concern or else it will be sold as piecemeal. So there are a lot of evolution happened in between all those things. I'm not going deep into that, but this is the basic function. This is the structure within which IPCs is. So what are the 2 days? Who all can go to NCLT for CIRP? Either the corporate debtor under section 10 or operational creditor under 9 or the financial creditor under 7. 7, 9 and 10. These are the people who can go and apply to the this thing. So let us see what happens. A default happens. It will go to the application. Financial creditor within 14 days, friends. 14 days is not sacrosanct. There are numerous judgments which says that direct and all the dates mentioned in the code is directory, not mandatory. But then court will also, tribunal will try to make it faster. So ascertain whether the default exists. If default exists, application, no disciplinary proceedings will go to notice to FC by if there is any defects, they'll be given another 7 days to rectify the defects, and it will be discussed, heard, and application has to be admitted as per the law within 14 days. They have to give time, and within 21 days decision has to 14 plus 7 21 days decision has to be taken. In our case, I have seen umpteen number of cases, it never happens. But then end of the day, the rule says timelines are just directory, not mandatory, because when you are giving justice, you cannot rush through. Natural justice is there, even though, as I said before, there is no Companies Act, the NCLT and NCLAT are constituted under the Companies Act. They are not driven by the equity principles or constitutional principle, but natural justice should be given. Section 11, section 60, subsection 5 talks about natural justice. Therefore, to hear the other parties and see whether they should be given. So it's a little complicated. So who all are not entitled to make an application? A CD undergoing a CIRP already is going undergo. Again, he cannot do. 12 months prior already done, he cannot do. A CD or an FC who has violated any terms of already one resolution has been passed, he cannot come, and he violated, he cannot come again. These are all things. This is a little, complicated. I'll just quickly go through this. I was mentioning about 180 days, 180 days with 66%, extension beyond 180 days, 66% of the committee of creditors have to decide for 90 days, one time, a maximum of 90 days. As I said, 330 up to date. Moratorium 14, no cases will, lie. And of course, I was mentioning about public announcement, appointment of interim, all these things I've quickly mentioned. So this is the second phase of the presentation. So according to me, insolvency profession is the mother of all professions. Insolvency professional is insolvency profession, not professional. Profession is the mother of all professions. Why I'm saying this? The law says the IP can appoint experts. Who are the experts? Chartered accountant, cost accountant, company secretary, lawyer, engineer, valuer, anybody can appoint. Why? To do this. But he has to get the ratification of the committee of creditors. So let me just explain to you what are the role of CMA during the first stage, which is CIRP, Corporate Insolvency Resolution Process. He can act as an IRP. He can later on become a resolution professional, follow the processes. He can even become a liquidator if it is going to liquidation. Alternatively, the next option is he can present before a practicing cost accountant, can appear before the NCLT and NCLAT. So what is he supposed to do? He has got a good control of the Companies Act, good control of the IBC, and of course a CP, practicing COP. That's all. Of course, we need to have a little bit of knowledge of to draft, make submissions and other things. Friends, nobody comes into the world with knowing all these things. According to me, I used to always say COVID has been, COVID has been designed for me. COVID came to the world for me. Thanks to Wuhan. Why? Because ever since 2020, everything was online. I was blessed to see great legends of lawyers arguing before the Honorable Supreme Court, NCLAT, NCLT, High Courts. All this online I could hear. You name it, I have heard, including the great Harish Salves, Mukul Rohtagis, Kapil Sibals, Chidambarams, all those great lawyers. Amazing articulation. So litigation is an area where a cost accountant can focus. It will not come overnight. You have to constantly engage and see. Best thing is to try that. And believe me, friends, it is very lucrative. It is very lucrative, but you have to position yourself in such a way that lucrative. I'm not talking about every year you will get like Sibyl, Kapil Sibyl or something. No. You compare with the, if you look at IRP and RP and liquidator, the minimum fees, there's a recent change. Minimum fees is 1 lakh per month. It crosses with the claim size. If it is more than 100 crores, 1.5 lakhs. There's a table. So it was in Hyderabad, I believe. Our honorable president Vijayendra Sharma was handling a session. He was saying that our institute also should keep a fees based on minimum fees. Minimum fees like that, not like bidding and all those things. Anyway, this is the only, according to me, the only charm in this profession. The IRP is only charm in the sense, of course, you get a respect. The other great charm is the money part of it. I've seen people in Kerala earning more than 1 crore, touching 1 crore their fees, but peace of mind, he's when you speak to him, he's in some other world. Be it as it may. The other area is the litigation, which I mentioned. You as a practicing cost accountant, you can do that. So what are the role? He can be, you can draft it, draft the applications, prepare, notes and argue. It is actually very good, friends. In fact, those who feel that you have, likeness of analyzing and original thinking or interpretation skills, please do not hesitate. Take up a couple of cases. And let me give you a statistics. Out of the 100 people coming in, 95 would be advocates, 96 would be advocates, 2 would be company secretaries. 96 plus 2, 98. 98 plus 2 is company secretaries. I don't see a practicing cost accountant in the litigation space in NCLTs. RPs, cost accountant RPs, abundant. Practicing cost accountant or RPs, you have got abundance of them. Be it in North India or West India or Western India, North India, Eastern India, or even South. There are a lot of practicing cost accountants working as a RP. But litigation, no. Very few. I don't know why, but there is, be it as it may. The third thing is, friends, consultant. I told you, CARP process, liquidation process, sending reports, reporting to the RBA, IBBA, reporting to IPA, reporting to NCLT. All those things are laborious thing. You have to prepare an information memorandum. There is something called expression of interest. There is something called evaluation metrics. What is evaluation metrics? It is simple. It's very objective. Look, if you are interested in giving a resolution plan, look, this is a matrix. This, according to this matrix, your resolution plan will be valued or analyzed. Therefore, that itself requires some sort of thing. For this, according to the best is a finance professional. Because for a lawyer, if you say that discounting method, all those things, it will go tangent. They will not, and a typical lawyer will never understand that, financial thing, discounted cash flow, assuming somebody that if you are paying the debt after 2 years, discounted at 12%, he will go crazy. So we have an edge. So consultant, the space of a consultant of a practicing company's cost accountant in CARP process is huge. Only thing is you need to have a deep understanding of the law. And believe me, the prices are huge. There are people who are helping and they are taking good fat money, and you can do your practice simultaneously. Support services, I was mentioning, what are support services? All those mailing, drafting, and all those things. There are a lot of meetings happening. Who will have to drive the minutes, explanatory statement, all those things. So it's a big time job. Next is liquidation. Same thing. The only difference is CARP instead of liquidation. Here what happens is, when it comes to CARP, you are talking about resolution plan. In the case of liquidation, you are talking about you can help somebody who is interested to take over a company as a going concern. There should be a plan. Section 230, reorganization, merger and all those things. Remember that? Section 230 of the Companies Act. Here the cost account can play a big role. Again, the support service is huge. Friends, the documentation part of both CARP, liquidation, be it creditors liquidation or the voluntary liquidation, is just too huge. Therefore, a liquidator will not have enough time or quality assistance to help. There is a position of CMA, according to me. Individual insolvency, there is an application. That application can be vetted by a cost accountant as a, instead of resolution plan. In the individual insolvency, we call it repayment plan. What is repayment plan? It is a plan given by the borrower or a debtor to the creditor saying that, look, I've got these payments to be made. This is my plan. I'll pay this, I'll sell this and pay this, sell this asset and pay after 6 months time. All those things, taking care of all this. Who is a bankruptcy trustee? Like a person who, like a liquidator, is a bankruptcy trustee. Like a resolution professional, liquidator in the company, he is called bankruptcy trustee in the individual insolvency. He can be bankruptcy trustee. What is the supporting services? Valuation. You should be a registered. It is a compulsory thing that when a company undergoes a CARP, within 30 days, after 30 days, within 7 days, you have to appoint a valuer. 3 types of valuers: land and building, plant and machinery, securities and financial assets. Who can be the securities and financial assets? Chartered cost company secretary, management functions. Therefore, this is a huge area. Huge meaning extremely huge area, because this is a compulsory thing. And when company moves from CARP to liquidation, if in the extreme case, If the liquidator feels that there is a depreciation in the value, is a diminution in the value, the valuation has to be taken fresh, then he has to do all these things. Another thing is forensic auditor. Our institute is coming up, is already, 3 or 4 batches is over. Friends, I'll tell you why. As I told you in the prelude, in the beginning itself, the debtor defaulted, loan taken, and the debtor defaulted. There should be a reason for that. If the money taken from the bank or the lender is applied judiciously or appropriately, this insolvency would not have happened. So there should be some hera-fairy done by this person. So for which the code says there are certain avoidance application, avoidance transaction. What are they? Preferential transaction, you give preference to one creditor over the other. Undervalued transaction, you value less than the actual value. Fraudulent transaction, you with the malafide intent, you enter into a transaction which is in fraudulent nature, and this extortionate transaction. Then there is something called section 66, fraudulent fraud, total fraud. So all these things, forensic auditor's report is valid. Therefore, a foreign CMA is a best bet for a valuer because he has got an finance brain and a management accounting brain, a bit of arithmetical brain. Forensic auditor typically is a person who has gone through the audit, financial audit, cost audit, performance audit, whatever it is. So I've seen different types of forensic audit in the past few years. Most of it is chartered accountants, but cost accountants are also doing well. So this is an area where all of us can, earmark. And friends, let me just wrap this particular thing. What are the roles of a cost accountant? 3. He can work as a resolution professional, IRP, RP, a liquidator, or a bankruptcy trustee, or a resolution professional in the individual. Or he can be a litigation expert. As Padmanabhan sir said, now I have decided not to take assignments and RP because I thought it is draining. I need to have a big team, and it's like a thankless job according to me. My own view, it's not a thankless job in the sense I'm an umpire. All of us know how Dhoni scored that last 6 in the 2011 World Cup, that pull over the mid-on, and the way he pulls back after that he pulls back the back. But do you remember the name of the umpire? I don't know. So only we people remember the Mahendra Singh Dhoni or Gautam Gambhir that day, or Virat Kohli that day, but nobody remembers the umpire. If you are such a notorious resolution professional, you come up in case laws. I'm not saying it is bad, but according to me, RP is an amazing thing, but I prefer to be in the litigation space. By yet another divine intervention, I had to step down from a cost accountant practice to legal practice. By the time I have decided to go back to cost accountancy, this IP came in, thanks to Padmanabhan sir. So therefore, the fate did not put me back to CMA practice. Instead, I now into a cost accountant. I'm known, believe me, all of us know that I'm more known as a cost accountant rather than a lawyer, but still I'm a cost accountant, but then appearing in NCLT, NCLAT, and very, very, very few cases in other things. So, number 1, IRP, RP or liquidator. Number 2, a litigation. Number 3, a consultant. And if you, friends, education, qualification, any man is always welcome. Therefore, those who are having more than 10 years of experience, I strongly urge you to write limited insolvency examination. You might take first attempt or 2 attempts, doesn't matter. Learning. And also you have to take valuers. Friends, coming days is going to be the days for registered valuers and insolvency professionals. In other cases, in fact, I don't want to name the company where I'm arguing for a client. We appointed an independent IP, a CA with IP to manage the company. I'm not mentioning the company. All of us in this state of Kerala knows, if not in India. So I'm not mentioning the company. Why? it is when you are in the panel of NCLT, they will appoint you. So support service is another thing. As I told you, there are a lot of additional work to be done for which RP liquidator will not have time and energy, but he'll be ready to pay you with the support of committee of creditors and consultancies. So these are the areas, according to me, the role of cost accountants or opportunity of cost accountants for IBC. And how do you do that? Please visit www.ibba.gov.in on the second Act, legal framework, Act, regulation, certificate. Please go through that, and that is the way we have to do. And yeah, I'm done with my presentation, and I think I'm back. Can you see me?
Yes, sir. Thank you, sir.
Right.
Thank you, dear Shankar sir, for your valuable time, and I seriously hope that all the members who have attended across the nation for this webinar has definitely benefited. And we have been planning, as Padmanabhan sir told, we have been planning this program for a long while, and ultimately this today, January 19, we could be able to make it. And we specifically wanted Shankar sir itself to take the session on this particular topic, because in the CMA fraternity, not only in CMA fraternity, I think in South India, there is no other leading insolvency professional as far as I know. Maybe I'm not adding more. If there is if any of the persons has any person has any clarity or any doubt, you can directly type the same into the Q&A box, chat box, so that Shankar sir will answer.
If at all anybody has some doubts, they can route it through Trivandrum chapters ID to me, or it is like shankarpanicker@gmail.com, SANKARPANICKER@gmail.com. Normally I reply within 1 or 2 days, and the number is 9959 11101. If at all you don't get a revert, you have all the freedom to WhatsApp.
Sir, I guess there is not much doubt which is much curious which is coming through the live Q&A. I think many participants would directly contact you, but definitely I will say, when I see the participant list for this particular webinar, we are very delighted to see that the cost accountants across the country has attended this program, and this 200 chapter program reached that particular program with a particular specific subject with the right person. I guess it has benefited for the CMS across the country, because I can see participants from Gujarat, I can see participants from Rajasthan, Delhi, and across the country participants has attended, and definitely I think it would be a new pathway, because you had shown direction to a new pathway to the practicing members also. I think many of the participants, many of the cost accountants, the practicing cost accountants would also join your way for that insolvency, sir. Okay, with this, I, on behalf of Trivandrum chapter, sincerely thanking our none other than our SASC chairman and the speaker for the day, Shankar sir, for his valuable time. Thank you, sir, on behalf of myself and the entire managing committee team. And further, I would like to thank our mentor of the Trivandrum chapter, is none other than our council member, beloved H. Padmanabhan sir, who is behind all the initiatives of Trivandrum chapter. I should tell, all the initiative of Trivandrum chapter is with his guidance only. In fact, he's a member, he's a part of our managing committee also. But for an official thing, I am thanking Padmanabhan sir also. And along with that, I thank each and every one of the participants who has attended this webinar session from across the country. On behalf of Trivandrum Managing Committee, I personally, individually thank each one of you. And with this, we can, I think we can end this session. So we got a request from one member that to share the presentation.
I'll do that.
In fact,
In fact, sir, for that particular member, all the participants who has attended this program, for their mail address will be available with our portal, and we will be definitely sending this PowerPoint as when shared by the Shankar sir to the participants.
Definitely.
Okay, with this, we all wish you a good day. Thank you.
Thank you. Thank you. I'm logging off, Pranav. Thank you. Then leave it.
Okay, sir. Thank you.